Hey, here we are with the third pillar of effective AML framework explaining about IT systems and controls. Hope you had an understanding from the summary in our earlier upload, and today let's discuss more about this function. For the benefit of those who have not seen our earlier upload regarding the summary, here we explain once again. The third pillar, IT system and controls, core solution, risk profiling, model screening, monitoring are the tools required for effectively performing the compliance function. Each of these areas must be studied and a proper system to be developed based on the size and the nature of business. For example, what kind of business are you into? Forex, remittance, gold, real estate, or any ancillary products or services. Let us now go in detail discussing about the third pillar on IT systems and control. This function is broadly divided into 5 sections: core systems, risk profiling and modeling, screening, monitoring, and reporting. Let's discuss about the first section, core system. Point number 1. All KYC documents to be collected and mandatory field should be available in the system for the data entry. Point number 2. The requirements for SDD, CDD, and EDD should be clearly mentioned. Marking of PEP and high-risk customers, manual or automated. Point number 4. Alerts and escalations. Point number 5. Dual controls for important areas, that is maker-checker control even for risk screening and monitoring. Point number 6. Avoidance of manual inputs wherever possible. For example, Emirates ID integration. Point number 7. MIS and regulatory reports. Point number 8. Security aspects and downtime issues if AML solution is connected to the core system through API. Point number 9. Access restrictions, especially masters, for the below areas. Point number 10. User logs. Point number 11. Backup. Now let's go to section 2, which is risk profiling and modeling. Point number 1. Classification of customers as high, medium, and low risk based on the guidelines provided by the regulator. Point number 2. The various threats and vulnerabilities specified by the regulator to be considered in arriving at the risk parameters. Point number 3. Risk modeling to include product risk or service risk, jurisdiction risk, delivery channel risk, customer risk, and counterparty risk. Point number 4. Risk modeling to consider various parameters including screening and monitoring risk, and accordingly risk rating needs to be arrived for the due diligence process. Point number 5. Risk register to be maintained and identify the inherent and residual risk along with the risk mitigants controls for all AML compliance process. Section 3. Screening. Automation is mandatory for all various financial institutions, and the sanctioned lists have to be screened against the customer names, including beneficial owner on real-time basis and whenever there are updates on the sanction list. Recommended to check periodically the entire customer database, including the inactive customers or accounts, against sanction list for effective monitoring and control purpose. Match the percentage of names along with the complete details should be reported to the compliance for the actions. False positive percentage to be reduced with proper algorithms. Risk rating to be assigned based on the hit percentage, and accordingly the risk assessment should be considered in arriving at the appropriate risk for the customer. Negative media news to be captured and risk to be assigned accordingly. To ensure local UAE and UN lists are covered, including PEPs, but recommended to have OFAC, EU, etc. list to be checked for any cross-border transactions and as per the respective country's requirement. Section 4. Monitoring rules and scenarios. The required rules as per the business and the compliance requirements are to be made available to compliance function for effective monitoring. Scenarios pertaining to high-risk customers, high-value transactions, politically exposed parties, cash transactions, more than the certain limits, transactions required EDD, transactions to multiple beneficiaries, etc. should be reported. Section 5. Reporting. All reports which are required for regulatory and monitoring purposes to be made available in the system to the compliance function and the senior management including board. To conclude this pillar, it is the responsibility of compliance officer, risk officer, and the internal auditor to review periodically the systems, requirements, and develop control based on the risk identified in various processes and accordingly update the policy and procedures wherever required. The guideline document published by the regulator from time to time should be reviewed and accordingly the system requirements to be addressed along with appropriate control. We are happy to assist you in any of your compliance needs. The next video will be explaining in detail Pillar 4. Please share with everyone who can be benefited with this awareness session and let us know in case of any support or advisory required. Together, let's fight money laundering and terrorist financing and support all the initiatives taken by our regulators. Thank you.